Hi, everyone, and welcome to AB Conversations, where we will help you CFP your way out of it. A podcast where you get into the minds of a couple certified financial planners on how we think and feel about everyday financial planning questions and what should really matter most to you. A healthier financial life starts now.
Hey, Ben. How you doing today?
Excellent, Adam. Excellent.
Great. For those listening to this in the future after we're recording, let's hope for some Phillies victories in the World Series.
Yeah, and timing of this, this may be coming out right near election time, and I'll share with you. You actually weren't in this meeting today. I was asked by a potential client today. So what's your background in? I'm sure you majored in this thing in college. I'm like, nope, political science major. Found out what I didn't want to do. So
yeah,
it feels right to be talking politics today.
Yeah, if there's one thing that I've seen over the last couple of weeks bring our area together, it is the Phillies. But one thing that does not bring people together is politics.
Man,
that's
good.
Where we're gonna spend some time today. And really, the question for our purposes is: do elections matter in the scope of long-term investment planning or long-term financial retirement planning?
Yeah, with the media in our face every day with the stuff ads, we know many people are politically driven. The reality is decades and decades of research tell us that election years have no statistical significance on market returns. None. So it's not to minimize. It's not to minimize how the elections are important, right? People have certain issues, people's rights, the direction of the country, strong feelings, they matter. But should you be making large bets? You really shouldn't.
Yeah, and I know we've talked about this in different iterations of the podcast, different conversations. There are so many different variables that get factored into the market's movements and volatility over time. Elections and politics and policy absolutely have an impact. They are one of those variables, but they're just that. They are one of many, 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 many different variables. So to be able to isolate any of those, let alone call it an election or a midterm elections year here as the sole variable to drive the markets, or to feel like you're singling out, this is the variable I'm going to isolate and make a huge investment decision based off of that. We certainly wouldn't say that that's a prudent thing to do.
Yeah, and I'm going to say this a different way and make it sound really optimistic. As we're talking about, Phillies, Astros here and elections.
Yeah,
I think the good news, and maybe let's go into some of this the historical context is no matter how you're going to feel 2 weeks from now when these elections are over, whether you feel like you've won or lost, the good news is stocks are probably going to win, right?
Right.
Historically, let's go through it.
Yeah.
The market doesn't like uncertainty. Just getting on the other side of something like this historically has been positive momentum. And in a year where we're really not feeling any positive momentum with stocks, with bonds, with anything, let's look at this contentious time as a moment in time, and hopefully the other end of it's going to be the start of the next bull market.
Yeah, so some of the research that I did for this, a couple different places, but midterm election years in general are poor performing investment years, just in general. And I mean, just that there are those types of data points historically that show, of the 4-year presidential cycle, that this year is typically the worst year for returns. Now, we're certainly experiencing that. Is that completely driven by politics at this point? Probably not.
No, not completely.
I don't know there are a lot of other things going on, but the data does suggest that getting beyond, and in this case, November, right? Getting past the first 3 quarters of the year, having some certainty, no matter what that looks like, the end of the year typically is the best performing, quarter of the midterm election year. So to your point, it doesn't even it may not even matter what the outcome of the election is. Maybe we end up with some sort of divided government, which we can get into why we think that may happen, or I guess maybe why that's beneficial in the eyes of the market. But historically speaking, that last quarter of the year, it really does turn the corner. Historically speaking, maybe this year will be different, but that last quarter of the year is typically a really strong performer, just getting beyond the elections and getting beyond all of the political headlines and media and all of that. In the eyes of the market, it's one less piece of uncertainty at that point.
Yeah, and that's where your initial comment here on, politics can attract headlines, but really what is it that the market's going to pay attention to? It's policy. The reason the market likes the certainty of how the structure is going to be, and historically why it likes divided government, is it's harder to change the rules of the game on the way that companies would then have to adapt to a new policy or a new environment. And I think we've really seen over these last couple of years, COVID-19 especially, having to change the way the economy was going to act, to change the way that corporations were going to have to try to drive profits. We have the ability to adapt quickly. But no matter what happens in 2 weeks, nobody's out there projecting huge waves of change. And I think we saw that in 2016 and in 2020. I don't remember ever a more contentious presidential election than 2020, with everything that felt like it was at stake. And I think there were a lot of people that could have got caught on either side of that going, I don't feel good about this, or I don't feel good about this, so I don't want to invest. And as soon as we got on the other side of that, essentially, I realized it was blue wave by title, but it was like fit straight down the middle, essentially as close as it could get. In the Senate and the House of Representatives, that the market really digested that as, okay, it's going to be very hard for huge policy change to happen. So how did the market react? Very positively, because it felt like, okay, playing in the sandbox right now, this next 2 years or 4 year sandbox, market knows the rules. Companies are going to move forward and try to be profitable. And that was really rewarded up until the beginning of this year.
Yeah. And I'm glad you made that point, because I'm going back to 2016 when Trump won the election. I distinctly remember being up, till the wee hours of the morning.
You and I texting at 1 a.m., 2 a.m.
Yeah. Watching, these results come in, and the futures markets, essentially where the market would open up potentially the next day for trading. I mean, they were down 6% or 5%. It was a massive drop, essentially, that was happening overnight as these results were being digested. By the time daylight rolled around and the market was open for trading and the day finished, the market ended up positive over 1%. So it was completely unfathomable to me at that point, where it was, Trump was kind of the outsider at that time. You couldn't even wrap your mind around him winning the election. And then when it seemed like that was going to happen and the futures market essentially tanked, it really felt like, oh man, this is going to be big news. We're going to have to deal with this. And then 12 hours later, it essentially solved itself.
Do you remember setting up camp in your office, both of us? Yeah. And we were communicating, we were going down the list trying to communicate to every client we could, because we thought this was Armageddon, that the market's, the bottom had completely fallen out. Hey, lessons learned by us too. That was what, now 6-7 years ago, but it's a good depiction of the market just loathes uncertainty. And once it's able to digest a variable that, at that point felt known, it got itself right back to where it needed to, right? That pendulum should never swing too far. And if it does, that is not the time to react. Right. And this election cycle is going to be no different. I've realized that it will be emotional for many people on many different fronts, but historically, just getting on the other side of it's been good.
Yeah. So on that note, I think, there are more statistics, in a midterm election year, the current party that is in the presidential party essentially typically loses seats in the House and the Senate.
Not typically,
again,
like
100% of the time. Oh, okay.
Yeah, like a lot, like a close, significant amount of time.
So in our estimates then right now, if that holds true And to your point, with a very slim margin as it is right now, there's a really good shot that we end up with that form of split government where the Democratic Party may hold the presidency, and then either the House or the Senate or both are controlled by Republicans. And then again, in the eyes of the market, that just means that, yeah, no big policy introductions, probably not any more major spending bills, probably no major tax changes, which for our purposes, I think that's always on people's minds. It really does kind of set the rules of the game for the next couple of years at least. And historically speaking, a divided government has been what we've been under for 60+% of the time. Looking at my notes here, this was a study that JP Morgan put together. Since World War II, 60% of the time we've been in some form of divided government.
Wow.
So from that standpoint, it's what we've felt the most. And the markets do typically like that. There's always outliers. There's always variables that can prove that right or wrong. But historically speaking, that is kind of a nice environment for companies and for stocks to be able to thrive.
Yeah, and you and I are not here to, shake a crystal ball and make some sort of prediction that we shouldn't be making. But if you take, let's stick to the theme. If you take kind of major policy change off the table as a likelihood in these next 2 years, then what's the market going to go back to focusing on? It's going to be the Fed, which it's focused on all year.
Yep.
There's debates here that we could make on whether they're closer to the end of a rising rate cycle or somewhere in the middle, but
yeah,
the market's going to be forward looking on that, and it's going to continue to look at some of these companies and the numbers on whether they can remain profitable. And in both cases, I'm being the optimist here today going, I hope then that the worst of it is over, and this election cycle being one less thing to worry about. Again, it's going to be good, hopefully, for investors' psyche to know that we've been in this period of uncertainty, but if we're moving out of that, hopefully good things will happen. Patience you'll be rewarded for continuing to be patient.
Yes. Yeah. So maybe I'll pivot a little bit more towards the personal side of how people can get themselves a little twisted in knots, just politically speaking. I mean, we know this country is very polarized when it comes to politics. It doesn't feel like, it definitely feels like there are just the extremes right now. The political ads really kind of drive that home. But I've had conversations with people that want to influence their decision-making process on their investments with how they feel about the politics or the current party in office or the party they think they're going to be in office, whatever that may look like. And it shouldn't come as a surprise to anybody to hear us say that that's not a good strategy to make your investment decisions around. That is kind of the basis. There was a study by Pew Research Center. Again, this was published, I guess it was a couple of years ago. I'd have to look at the notes, but the point being, you can see how it ebbs and flows over time. For anybody who is Republican or leans Republican, their feelings on the economy and on the markets are higher when there's a Republican holding the presidency and lower when there's a Democrat holding the presidency, and vice versa. If you're Democrat and lean Democrat, it is flip-flopped all the way around. So that all makes logical sense, I guess, but for purposes of investing, the data doesn't back that up, right? The long-term results in the stock market are the long-term results for a reason, and they don't just magically get better because of how you feel about politics and who's in office at any given point in time.
Yeah, and I know that we've said that, and it makes it, again, we're not trying to sound flippant. It's important for people to, have their belief system. Their values are supposed to be something that drives financial planning. But we've also said it before, what typically happens with investors when they get emotional is they make poor timing decisions. And that's just statistically proven too. And we can share that data through a slide if we need to for compliance. But right, the average investor returns are much less than the indice returns. And the only way to explain that is it's behavior. It's investor behavior, not the investments themselves. That look, I don't feel good about the direction of this country, so I'm going to sell out of my investments. Okay, but then you may be missing that next upswing, which is always going to be our fear when people say, all right, I need to scale back. I need to scale back.
Yeah.
You can't afford to miss when things turn around. And by the time you feel good or you feel better, you're probably late to that situation. So, we say that to put politics in that camp. Don't let your political affiliations drive the investment decisions.
Yeah.
Because you'll probably burn yourself.
Yeah. So on that note, I guess one last statistic that I'd like to bring up. So we talked a little bit earlier about, midterm election years are typically very volatile years in the stock market. The good news is that off of those lows of those midterm election years, so I should say the year following a midterm election year, the S&P 500 has been higher every single time since 1950.
Yeah, 18 out of 18.
18 out of 18 years. I was going to say, should this time be any different? Maybe.
It could be. Right.
But we also know where we're starting right now as a pretty low starting point compared to where we started the year. So even just in a relative perspective, the odds of us having an up year next year are higher than they were when we started this year, just again, based off of past returns. So again, not our crystal ball, not making a prediction, but history does show that the year after a midterm election year typically are positive years. I shouldn't say typically, 100% of the time since 1950, 18 out of 18 times, the market has been positive the following year.
So do elections matter? Yes. However, from an investment standpoint, is there any statistically significant impact on market returns? No, other than to say, more often than not, just getting on the other side of it is good for returns. So
yes,
whether you're rooting for blue or red or somewhere in between, hopefully we all feel like winners a couple of weeks from now.
Yep. Stick to your plan. Stick to your investment plan. It's very hard to be disciplined right now. I know we talked about that recently on our emotionally driven podcast right now with investments, but yeah, stay the course, be disciplined. As long as that plan was the right plan for you, whenever, a couple of years ago, a year ago, it should still fit, but maybe it's worth reviewing just to make sure if any adjustments do need to be made. But yes, I think oftentimes it is not the fun advice, but stay the course.
Yep.
It may make sense to do nothing in the long run. But yeah, politics should be no different.
And if you need to talk it out, let's talk it out.
Yep. Well said.
And go Philly.
Go Phils. See ya. All right. Thanks.
Hey everyone, Adam and I really appreciate you tuning in. Please note that the opinions we voiced in the show are for general information only and are not intended to provide specific recommendations for any individual. To determine which strategies or investments may be most appropriate for you, consult with your attorney, your accountant, and financial advisor or tax advisor prior to making any decisions or investing. Thanks for listening.